following program is sponsored by A.G. Edwards.
And, again, call us at 312-705-2666 so you get a chance to have your question answered. We welcome now Catrice Wells. Good to have you with us, Catrice.
Good to be here.
What do you sense in terms of oil prices and what we can look for in terms of oil stocks?
Well, oil prices have kind of fluctuated between 18 and 22 for the past 7 years. Oil companies can continue to operate profitably. I think oil prices could probably go as low as $13 and oil companies continue to operate profitably. You have oil companies that are very diversified. You have the petrochemical division, which is very profitable for a lot of oil companies and very diversified. So oil companies, I think, will continue to do well. One thing with declining oil prices, the airline stocks should do very well because, the cost of fuel is lower, so they can travel at a lower cost, and basically increase their profit margins there. Like United Airlines has been doing pretty good for over the past few years, and they probably will continue to do well. They're operating basically at full capacity, and they've eliminated some of their aircraft and eliminated some routes, and they haven't really replaced those routes. So therefore, we've seen more of an increase of demand for airline tickets, and those prices have kind of remained steady, and they're taking advantage of the low oil prices.
How have you been dealing with your clients? What do you tell them during all of these tumultuous times in the market?
Well, right now we're just basically looking at opportunities. We kind of develop a wish list, some stocks that we've been wanting to buy or maybe add to the position, and so we kind of develop a price target that we may want to accumulate shares. So we're looking at different opportunities in the market. There's a lot of fear that, maybe what's going on overseas will spill over to the U.S., but you have to really look at the big picture and what's really going on here. Inflation is very low. Employment is very high. You have a lot of refinancing of mortgages, which basically frees up a lot of money for a lot of people. It reduces their debt and also gives them a tax break. And so with interest rates dropping, I think our economy is still healthy, maybe not growing as fast as it was previously, but I think we still have a pretty healthy market, healthy economy, which gives us a healthy market. So I think that we're maybe experiencing a little volatility in sympathy with what's going on overseas, but I think that overall we'll continue to do pretty good.
What do you like in the way of fixed income these days?
Well, the preferred stocks, they call them synthetic preferreds. They've changed the preferreds to more the synthetic preferreds, and I think that that is a good place to put some money. If you're going to be retiring in a year, you really should not be in the stock market per se, have a bulk of your money in the stock market. Because of the volatility, we don't know what's going to happen for the next 6 to 12 months. Of course, long term, we know that the market generally goes up. So you have to be very cautious. The synthetic preferreds, they offer higher yields, and they have some call protection versus bonds, and they generally pay higher than the corporate bonds. And sometimes you can get a preferred that pays on a monthly basis or a quarterly basis.
What's the difference in a synthetic and a regular?
Well, they've changed. A lot of it has to do with the corporate tax provisions there and how they can deduct the dividends that they pay on the synthetic preferred. So a lot of that has...
So do you like the synthetic better?
I do. I really do. And I think that investors like it better. And they trade on the New York Stock Exchange, majority of them, and some trade over the counter, but I do like the synthetic preferreds.
For those people who would like to invest in the internet stocks that so many people are afraid to touch, what would you recommend? A fund?
I haven't done a lot of funds for the internet, but I do recommend the technology funds, though, for long-term investors. But if you really want to invest in the internet stocks, go with the bigger companies like America Online. Their subscribership is growing. They're improving their services. They recently acquired a Netscape that hasn't actually been completed yet, but I do believe it will be completed by the first half of this year, the spring of '99. Maybe stick with companies like that. Watch them closely. Trade them. Don't buy and just put away and forget about it. That industry is not one that you want to do that yet. You have a lot of internet stocks coming public and just going to just astronomical levels, in the market. But I think you have to be very selective with that. A lot of those companies are not going to be around, in the few years to come. But I think you just have to be very selective with what you invest in.
All right. Again, we're taking questions now at 312-705-2666, 312-705-2666.